What's going on, everybody? Jeff here. Welcome back to the channel. It's time for another weekend recap video where we go over the week prior and how to prepare for the week ahead. This is the fourth video I have done. If you like these weekend recap videos, please leave a comment down below and I will continue to do this. We're going to go over a couple of the events that are upcoming, what happened the week prior as far as events and macro, and then take a deeper dive into the charts. I am still a little bit sick, so if I sound a little congested, I apologize, but I really wanted to get this video out. So let's get right into it. First off, in the yesterday's video, I talked about as we got a little initial reaction and the market opened up a little bit green, I said that the rising unemployment rate was actually positive, I think, for investors, which goes on the contrary because normally that would be bad. However, it does show that the the Federal Reserve policy of increasing rates is working, okay? Could be working, let's say is working, and that was a positive sign. And this article that came out after I made that video actually just details a little bit more about it. Now, when we talk about Fed policy, this is what is on every investor's mind right now. What is it going to be? Are we going to get the 50 basis point hike? Are we going to get the 75 basis point hike? Okay, a little over a week ago when Powell spoke at the end of the Jackson Hole Symposium on Friday, stating, listen, we're going full throttle ahead. Okay, we're going to continue everything we need to do in order to combat inflation. You saw the market took a big pull, but we're still sitting at about a 50-50 on where investors are pricing. All right, when it comes to 50 basis point hike or 75 basis point hike. I want to take one look further. Okay, this is at the end of the year, and right now the current target rate is 225 to 250, and only about 45%. Okay, of the market is priced in for that 4% rate by the end of the year. And during the Jackson Hole Symposium at the end, a lot of these Fed presidents were interviewed and they said, listen, they really want to get that target above 4% by the end of the year, if not at 4% by the end of the year. Get it a little bit higher than that at the start of 2023 and then keep it there. Okay, now the market's not going to price in towards the end of the year because so much can change, but the market hasn't priced this in. Now, just to give you a little bit more detailed view, right now, if we were to get to this 4%, which a lot of Fed presidents state this is exactly what their target is and where we should be, that's a 50 basis point hike in September, November, and December. So if we get that 75 in September and 50 still on the board for November and December, the market has a lot of room to the downside. Okay, so this September, the 21st, is really going to be on everybody's eyes. The September 13th is when the next CPI comes out. Last month we saw a little bit of cooling. This month they're going to look for that same thing. Now, while we are talking about CPI, and I will probably continue to mention this going forward, there's two things I want you to keep an eye on. One is the continuing energy prices, where energy prices have settled. We are in just a third of September, so some of those numbers might take a little bit to come in for the month of August. And also pay attention to if the White House says anything. Okay, this is very, very important. When July numbers came out, the White House was all over it saying it's going to be higher, it's going to be higher, it's going to be higher. They were dead quiet, okay, in August when the previous month's numbers came out. And it was a very big indication. Listen, chances are, CPI is going to come in a little bit lower. So keep that in mind. Now, of course, here we are after we've already, moved about close to, 8 to 10% down from our recent high. Everybody's jumping on the bear side. Okay, this is something I always like to look at when one side becomes just a little bit too crowded. We've had a big move, okay, to the downside in a short period of time. I'll look at this daily chart for you. We have a quick move to the downside or in any direction in a short period of time. That's when the bears start jumping on, and it's very common for market makers, okay, and these big funds to pile in a bunch of money, squeeze a little bit to the upside. Now, just to give you a little bit of reference to this, right now we're sitting at a negative 28. You can take a look at this Y chart and it goes into a little bit more detail of exactly what that number means. But in short, the average number on the bull bear spread is 7. Okay, which we move, the market generally moves to the upside. So obviously that is to the upside. When you're seeing that negative 28, that means the bears are being just a little bit too greedy. Okay, so keep that in mind. I do expect us to chop, and we'll go through the charts just a little bit more right now as we get into it. So right now we're sitting at 392 on the SPY. We bounced off that 390 level, which is a big level of support. You can see right here, looking at it. Now, we did curl around and try to test that 50-day moving average and clearly got rejected. So keep that in mind. When it comes to the VIX, which is the fear and volatility index, we're sitting at pretty neutral. Okay, and when you look at this daily chart, you can see when we get to about that 20 level, it's a little bit too, a little bit too bullish. Okay, there's too many longs in the game. We've probably already moved to the upside a little bit too much, or a little bit too bullish. And in contrary, when we get to that, let's say 30 to 32, we're probably a little bit too bearish. Well, right now we're sitting at about 25. We did get up to that 27, rejected a little bit, sitting at about 25, which is pretty neutral. Okay. Now I want to show you just the SPX because I have levels drawn a little bit with numbers actually to the side. So I expect over the next, pretty much the next week and a half, that we're probably going to get into a little bit of a chop zone. These are your two numbers I want you to pay attention to, that 39.20, and I have 39.75, but it's really that, I would say closer to be that 39.80 level. I feel like we're going to bounce in between that range. Now, if we do break out above that 39.80 level, 4,000 is very close. That is a huge psychological level. If we do get above that and hold, I think we can squeeze to the upside. We do have a couple gaps on the SPY, not on the SPX, but on the SPY, we do have a couple gaps to the upside. Okay, that will likely be tested. If we do break below that 39.20, which we are very close, okay, we did bounce below that 38.90 level, look to hold. It is a big weekly support going out and does have a lot of buying pressure. Okay, if you look back all the way till May, it did have a lot of buying pressure all the way into it. Okay, so look for a little bit of bounce to happen right there. If we retest that for the second time, okay, which means if we get down to that 38.90 level, we get that bounce as expected, we come back down to test that level and we break through, it's going to be a good ways down, all the way down to about that 38.10 level. Okay, until it shows we get some good buying pressure back into it. Okay, so keep those numbers in mind. Pause this, screenshot it. Okay, go over, replay what I just said. Keep those numbers in mind. That 39.20, 39.75, I think we'll get a little bit of chop. Now let's just take a look at a couple of bigger tickers. All right, now one thing I did point out when it comes to Apple on the daily and where SPY was on the weekly. Let me just show you this to give you just a better reference. So I had said, in one of the first weekend videos I made, I said, look at the shooting star we have. It's a very bearish setup. We're bouncing off the 50-week moving average. And the last time that happened, okay, that same setup was all at the end of the March. Clearly we saw downside. And as you can see, it is continuing. One thing that really stuck out to me was SPY was sitting at about 455. Right here, SPY sitting at about 425. However, Apple, the reason why I talk about Apple is because it's such heavily weighted inside the indices, okay? But last time Apple was sitting about 175, and here we are at about 172, okay? So if Apple continues to move to the downside, SPY has a lot more room. Now, right now, as you can see where we are at 155, it did get rejected. We're trying to hang on to that 50-day moving average. We did close below that. We do have some buying pressure here around this area, looking at the charts exactly where we were. Next level is going to be that 150. 150 does have some buying pressure, but it acts more as a psychological number, okay, rather than, looking at the charts and seeing that heavy buying pressure. We get through that 150. The next big area is going to be around that 142 to 143 on Apple, meaning if Apple is going to drop, let's say another 10%, okay, SPY has a lot more room to go to the downside. That's when we start trying to get back into that 381 level, that 380, 381 level, which coincides directly to the 380.10 on the SPX. So keep that in mind. A couple other ones I will look at very quickly for you. Tesla, which does stick out to me after the split. Naturally, Tesla does, tend to sell off, or even any other stocks, until that buying pressure really comes in around that 255 level. And then we've got NVIDIA, okay, which Microsoft also is another big one, but I want to talk about NVIDIA, where it's really breaking below that 143. Now, they do have that dividend news, which is going to come out. We might see a little bit of buying pressure into it. However, everything that happened with, with the deal with China and that thing going sour, although it was banned and then unbanned, that still remains to be unseen. A lot of downside movement. And another thing that sticks out to me is this right here. Look at the volume. This was big selling pressure, okay? So if NVIDIA continues to break down, there's not much, if you're looking at this daily chart at all, as support to the downside. So keep that in mind because it's another heavily weighted indicator. So guys, I hope this video helps. I'll see you in the next one.